This is the briefing for Friday, March 7th. I have to say, I believe that this is a market that is unsure of where value is as to whether it is really going to be lower or whether it's going to be higher. And it may be that this market is waiting for the potential for some type of news event that will potentially send the market in vertical development and an impulsive move to the downside. Now, certainly we have been trending lower over the past couple of weeks, but certainly we've not seen anything that is really very, very impulsive to the downside where we get 2, 3, 4 days of just extended losses without having pauses or counter trend rotations. We are seeing some type of strengthening from the internals. Now you can see this is today's trading right through here, and you can see the low that we made for today. It was a lower low below the previous lows, and you can see that breadth is beginning to increase. There's a really pretty good divergence. This is S&P breadth, so it's only 500 shares. You can see 191 shares were trading higher as opposed to lower in the S&P 500. And then you can see the NASDAQ is the same thing. This is NASDAQ breadth. You can see that it's beginning to improve as well. And of course, Russell breadth, IWM, represented by the IWM, is improving also. Now, that typically will happen in a counter trend rotation. And as I said to subscribers this week, this area right through here is the area I kind of set up as a rotational area, looking to be long above this 585 area and short below about 574. And certainly we broke through this. We rotated around it in yesterday's trading. Then we broke through in today's trading, had a little bit of follow through, but you can see what was happening with breadth right at that follow through. And that was just simply not an indication for me to take a short position. And certainly we saw this rotation back to the upside. The same thing happened in the Qs. You can see the rotational pattern right through here, a little bit lower low at the open today or after the open today. And then, of course, the rotation back up. This certainly signaled that there was some type of strength coming back into the market. Now, I also want to make a comment on this buying tail. You can see this buying tail right through here. That it's there on all three of the indices: the spiders, the Qs, and the IWM. Now, typically for me, when I see that, that tells me that sellers have exhausted themselves and that you're going to see some type of rotation. Now, if it were to the upside, it would be just the opposite. It would be buyers exhausted themselves and sellers were going to begin to take over. So this candle, this buying tail here that came in, and then the follow through that we saw was a clear indication we were going to see some type of rotation back to the upside. So sometimes a very smart trader who I learned a lot from once said that trading is being long, trading is being short, and trading is standing aside. And I chose to stand aside today because this certainly was not giving me an indication that we were going to see some type of strength to the downside, at least in today's trading. Now, looking at where we are a little bit longer term, now this is important also because you can see we've broken out of this area of rotation. We've had follow through for the last couple of days. The upside resistance is 580. That's really very, very significant and important resistance. And then downside support, which is what we tested today, is 565. And you can see the buying tail that came in right there as we approach this important key reference area. Now, you know, it's not just uncanny that I picked 565 and we came down to 565.63. But everybody who knows anything about the market and looking at where support and resistance areas are know these levels. And that's why typically you'll get a pause around a key reference area like that because traders try to determine whether value is going to be higher, whether it's going to be lower. And then you get a breakout from that pause, which gives you typically an area of good trade location. Volume increasing on this move to the downside. Watch 565 on Monday's trading because if we trade back through 565, That's going to open up trading down to the next level of support, which comes in at 540. Now, we had a little bit of improvement in 52-week highs minus 52-week lows, about only 211 negative as opposed to positive. And then, of course, you can see that bread, this is NYSE bread is improving slightly also. But that typically happens on a counter trend rotation. So I don't want to insinuate that the market is strengthening strongly internally, because it's not, but it is strengthening, suggesting some type of potential counter trend rotation or pause in the market. Now, in terms of the Qs, you can see the same thing. Qs came down right to this 484 area, traded right through it down to 480, and then the buying came in and drove it all the way back up. Really important key reference area. Upside resistance is at the 505 area, and you can see the pause that we had right there for 3 days. That is a very, very important upside resistance area. You can see volume increasing, a little bit of divergence in volume in the spiders and in the Qs today as we approach these key reference areas. And then, of course, bread strengthening slightly in the Qs as well. The Russell came down right to this 205 area, traded through it, traded straight back up again. The buying came in and closed right at 205, the 205 area. So closing right at it, you will want to look to be short the IWM below 205. Upside resistance comes in at 215. You can see volume increasing nicely in the IWM also. Watch these buying tails. These buying tails like this, when you see that, especially around a key reference area, it could signal the fact that we're going to see potentially some type of a continuation of rotation in Monday's trading. In terms of overbought and oversold, we're basically neutral. So this gives the market the opportunity to go up or to go down, to go in either direction. And then, of course, looking at where we are in terms of the 50-day moving average and the 200-day moving average, the percentage of stocks above those two averages, you can see we're in a pretty good decline and continuing that decline. This is for the this is for the S&P 500. And you can see the percentage of stocks above the 200-day moving average is really struggling as well. In terms of the NASDAQ, you can see it's really getting hit here. I'm surprised really that we haven't seen more downside and more of an impulsive move in terms of price development. And look what's happening with the 200-day moving average. Percentage of stocks above the 200-day moving average, only 39% in the NASDAQ are trading above its 200-day moving average. And the Russell really getting killed. 50-day moving average or 50-period moving average, 22.37% trading above it as opposed to below it. And the same thing with the 200-day moving average, 33% are trading above its 200-day moving average. So basically, looking for what happens on Monday, you can see all these buying tails and selling tails on these charts. That tells me that traders are really unsure as to whether they want to be long or whether they want to be short. But the general trend or the general sentiment is bearish because we've got this move to the downside, and it's been on a daily basis been a very good move. Not a whole lot of impulsiveness. We had an impulsive day here, here, and here. But then in terms of the rest of the days after that, it's really you could say that from I guess this is Tuesday's trading, that Tuesday, Wednesday, Thursday, Friday, that since then the traders are really unsure as to whether they want to be short or whether they want to be long, but they're leaning towards the short side of this market. So it's going to be interesting to see what happens. Certainly in the short term for Monday's trading, we want to look to be short below 573. Certainly watch what happens with bread. Now, bread kept me out of the market today, and this buying tail kept me out of the market, as I said previously. So short below 573, and then you want to be monitoring what happens as it approaches the low for today. And then same thing with the Qs. You want to be short below about 590, and then watch what happens. You want to be monitoring volume and the internals as it approaches today's low. In terms of the the Russell, short below 205, and then of course use caution as it approaches the low from today, because these buyers, as they stepped in today, if they don't step in and defend that price on Monday, if we get a test of this low, then that would suggest that we're going to see lower prices and potentially an impulsive move to the downside. Alternatively, watch these highs, because a downtrend, which is what we are on a 60-minute basis, is a series of lower highs and lower lows. Breaking 585 next week would suggest then that either this is a low that's in, or we're in the process of transitioning into something greater in terms of a counter trend rotation on an hourly basis. So watch these areas right through here very carefully in Monday and Tuesday's trading. Have a great weekend. I'll pick this up for subscribers on Monday afternoon.